Hey, this is Pat from Alphahorn.com with your Friday, April the 12th futures trading update for the ES and for the RTY, the Russell and the S&P futures contracts. We're looking at the Russell contract first, the June 19 RTY. And as you can see, the RTY spiked up along with the other equities overnight. Broke out of what looked like a descending triangle. I thought we may see some downside on Friday based on the pattern that we saw going into the close on Thursday. But it ended up breaking up out of that triangle. It made a new high. And right as the market was looking to open on Friday morning, we saw some weakness. And so whether the system is that I designed the system was, we're looking at different colored candles. Green candles mean something. There are two indicators behind that green candle that are both bullish for it to be green. When it's yellow, there's one of those two indicators is bullish, one's bearish. And when the candle's red, both of the indicators are on the bearish side. The background also is an indicator. Gray is bearish, white is bullish. And a break of the upper barrier here and then a breakdown back into it typically creates a pause, not necessarily bearish, but maybe at least some consolidation. So we look at that. We also look at that as a point of resistance unless there's a really strong move. And then of course there's this other indicator here that turns red or green as we look at it. So we're looking at range candles, and I look at a couple different length ranges on the RTY. I only look at one range for the ES, but to help me get in and out of trades, I typically use a couple of ranges. This first range is the shorter of the ranges, and it's a little bit more sensitive. So what we're looking for on Friday morning as we headed into the open and the trading day, I ended up not trading, but I had a lot going on Friday, but it came back and just wanted to do an update and just kind of show you how this system works. We around 7:30, around 8:30, about the time the market opened, we had a little pullback as we would expect as we entered the barrier here. We had a bounce up that made a slightly lower high. Now, the way the system is set up, the gray background with the red candles, this first little decline here could have been a sign to enter the market, and some traders may have elected to take it once the candle turned red and it broke down. With a stop in place, this trade could have been anything from a break-even trade to maybe a slightly positive or slightly negative trade, depending on how you trade it. What I would look for in that case is then to see what happened next. Does the market go on to make a higher high than it had previously made, or does it make a lower high, which it did in this case? And once that candle went from green to red with a lower high, I'm thinking bearish all the way. I'm waiting for a cross down here, bearish, red over green. Same thing here, red over green. I'm looking for a break below at least the midline, if not the red-green indicator. I'm looking for a gray background. So an entry at the close of this candle would be the first. I'd look for the confirmation candle to remain bearish, which in this case it did, and it closed actually higher than the close of the previous candle. So at that point, with the gray background, the bearish cross down here, and a candle below the midline of the barrier marker we have here, I would have entered this trade with somewhere in the third candle here, probably right after it opened. So I would have entered this somewhere in the neighborhood of 1591, probably say 70, and you have a stop, give yourself, however much your risk tolerance is, $62, $50, $100, whatever you want to tolerate, and then just follow it down. And as long as we have candle closes below the middle of this barrier here, or if you had enough where you were kind of happy with your trade, you get out anyway, if you're trailing your stops down, I would have looked for this as a magnet here from a volume perspective. We do use volume to help us get in and out of trades. I mean, look at the volume spike right here is exactly where you would expect, right here, you'd expect kind of exactly where you would expect the market to top out, as it reach this volume surplus up here. Similarly, we'd like for this to be a magnet, and it turned out that this trough right before the price optimization point provided support for this move down. So, that as well as, looking at kind of bullish crossovers or, just using, trailing stops as you get into the money. That would have been the one and only trade I would have taken had I been around on Friday for the RTY. From there, it's just a choppy mess of green and yellow candles, some red. I wouldn't have been too excited about this. Maybe had I been around, this may have been a trade. I don't like entering trades though on the short side when you've already got things that have reached oversold levels. So when your indicators are already approaching oversold and you have a new signal, I'd just beg off of those trades for the most part. I talked about using different size ranges. So let's go back to this area again for the entry into the RTY trade. As you can see, this range gave us turned out to be, I guess you'd call it a false signal here. The ultimate, this would have been like I said, a small win, small loss, break even, whatever, depending on how you manage the trade. Then you would have re-entered here and had a nice profitable trade. Looking at, that's the ES, let's look at, here is the RTY on a little bit longer range candle. Looking at that exact same setup here, you had the highs from the overnight, you had the move down, no red candles were printed in this longer range. You had the move up once again to a slightly lower high, and then the minute it started printing a candle that turned red, and the minute it broke below this black dash line, I would have taken that trade. The difference here is you're probably looking at not quite as optimal of an entry. Still, you would have gotten in somewhere in the probably 1590 range. And once again, as it approached price optimization down here, get it out at 1584, say, pick up 6 points, not a bad trade. The indicators, are supporting you along the way as well. And so that's the trade, for the RTY from Friday. Once again, going back to on the ES side of things, looking at the ES trade, similarly overnight we had a breach of the upper barrier, followed by weakness heading into the open. Still no trade confirmation. We went from green to transitional yellow candles. The minute we got the red candle that broke below the middle of the barrier, I would have taken that trade and then just manage it how you see fit. I probably would have exited on a touch of the lower barrier here. Once again, this indicator here told us downside was coming, so everybody can trade the system how they choose to. We hope to make it available this summer for anybody interested in. But anyway, I personally trade it based on I want at least 3 bearish confirmations. One would have been on the red candle. 2 actually would have been on the red candle. A third one would have been on the bearish cross here. Fourth one would have been down here. Anyway, that's the system and how it would have worked for Friday. Short trades for both the ES and the Russell. And after those short trades were exited, once again, really not a whole lot to look forward to for the rest of the day. It's a bunch of mess. Anyway, I hope everybody had a great week last week. We'll be back next week with more updates. Talk to you soon.